What's going on? Chris here, and I had an interesting talk with Larry Williams. He basically just read what I said, and he just says that the market is all about disagreement, and the joy of us can be right. Only one of us can be right, and in the future we will know. And I don't know. This is like the second time like interacting with him. The first time was more of just like a comment and praise. This one was more of criticism and disagreement and rationale. And it was just cool that he listened to what I had to say. And that's pretty much it. Uh, yeah, that's pretty much it. Just told him how I appreciate him. But he's more on the statistics side. So he is under the impression on the statistics side that we're going to have some kind of Santa rally and that inflation's going to come down and that it's going to be like old times. No recession, inflation coming down. And I am all about statistics, but at the same time, fundamentally, when we look at Eric with EVP Research, he he is did he come up with a new video? But well, mass layoffs just
Layoffs
started.
are starting to.
So he's saying that so one of the things that Larry Williams was talking about, his favorite indicator was layoffs, but the thing is layoffs are lagging, and
Pile.
Eric is saying that it's just started, and we're going to hear tomorrow on the 17th more information on that. But basically, this is that leading, lagging, and the longer leading, shorter leading, and we got leading indicators that are saying, hey, there's more unemployment to come. And on top of that, we got things outside of the market when it comes to, this is where we're at with the rate hikes, and this is kind of the 2-year minus the Fed funds where we're currently at. We got 1.77 points left to go according to the forward yield, and then the 2-year we got 1.29 points left to go, and then when it comes down to the Eurodollar futures, I think so. We look up Eurodollar futures. We got 5.3 minus 3.08. 2.2 points left to go. So we still got a couple points left to go. That's from market participants from 3 different asset classes, whether it be, or 2 different asset classes, but there's a lot of participants in there that could either have proprietary information or real time information. So we're going to get into it. Before I start, I'm going to just open a window really quick because sometimes it gets hot. Yeah, my computer lets off a lot of heat. So here, obviously look at the Eurodollar futures. And then here, we're looking at the yield percent inverted, and we've crossed over the 60%. We're at 61.81% inverted. So that's really interesting because there's a lot of hedging going on against risk and uncertainty, and those things could relate to a recession on the around the corner. So we're watching for the unemployment release tomorrow, Thursday, on the 17th, and then we're also looking at people hedging for recession. So there's a lot of crazy things going on And then we were to take a look at risk off, risk on indicators, reverse repo. Banks are safe and liquid. Negative zero spread on reverse repo minus secured overnight financing rate. 10-year minus reverse repo negative spread. Euro USD, we're at resistance or support for the dollar from this wick low, and I don't know, it looks like a close call to me. The week hasn't closed yet, and we could wick back above. The week hasn't closed yet, but yeah, like get one of these. Yeah, we're it's indecision on the week, and if we close back below, it'll be nice stop hunt. Technically, it might be a stop hunt right now. Yeah, we're pretty much right there. Stop hunt, and the dollar could come back. And that's kind of the boogeyman the market is fearing is this dollar coming back. Specifically, if we were to use that weekly high right there. Put this back to the 3-month, but there's a huge chance that the dollar could come back, and it's getting close. NFCI, we're under the blue, we're under the box, but it changes from week to week. You know, we gotta wait and see. University of Missouri, Michigan consumer sentiment still depressed. Manufacturing production minus inventory. Too much inventory. Too much inventory. No production. The 3-month, 10 years inverted big time. The worse it gets, the more likely it is that it's coming quicker. 5-year 30 inverted. 2-year 10-year inverted. Credit spreads looking terrible. Looking like it's rejecting. If we get a strong close on the week below, we could continue and test these lows, and then these lows, and then go lower for a deviation. It looks like we got a range here, and it would be the place for the deviation. Right here to here. This range disappeared. So, yeah, if we get below the 0.764, it's pretty much toast, or these lows. But a good place to buy would be in this fake out zone for a higher low. But this is kind of where I expect it to go if we were to go down. Now with long-term corporate bonds, we're into resistance. We got to see where we close on the week, but technically we're above this week close high, and we're going to see how long we can stay up here. But we're technically in resistance here, and we'll see what happens. Lumber versus gold. Lumber strength, we're kind of up against this line here, and it looks like we have a range. And depending on the recession, like it looks like, we're kind of under the chin already. Who knows how long we could be in this trap zone, but this might be a signal for 2024 of what's to come. We might be just kind of ranging in here until we break down for 2024, and then come back up for growth afterwards. Base metals versus precious metals, we're at resistance right now. Copper versus gold, we're under the previous wick high, so we're still within the last quarter range and under resistance. Junk versus TLT, we've wicked away from that zero line, so it almost looks like a rejection from these highs, And if we close the week below the 0.13, we're definitely going to get rejected. Move index is coming down, so it's definitely reached a high fear index for the bonds. And then discretionary versus consumer staples. As you can see here, we're in the danger zone, and we're close to the lows. Like if anything, I think there's going to be a huge stop hunt to the fake out zone here, and then a reclaim back up. And I'm thinking that's like the correct range. Not 100% sure. Is that just the that is what the range is saying right there. So we'll see how that plays out. But I'm expecting it to come down here for reclaim for 2023, lower high, or wherever that may be, and then that's it. And then we could look at the factors really quick. So this is large cap versus small cap. So large cap is definitely holding and strong. So we expect to see continued strength in large cap and weakness in small cap until that changes. And that could be seen also here. We had a nice strong close of this quarter over the previous quarter high, and we're just consolidating for a nice flag to move higher. Right here is when we would begin to think that small cap could overtake large cap for a reversal. So it's too early for betting on small cap, but its time is coming. This is the tech versus the S&P 500, definitely breaking down more strength towards the S&P 500 versus tech, and it's only going to get worse. We haven't hit demand yet, so continued weakening in tech. Here is basically the factor curve, basically the things for growth and then the things for risk on, risk off, and the risk off is definitely winning. It's kind of pulled back a little bit, but I think we're in like a buy zone in some way, but we're gonna see just maybe if we hit this demand down here, what happens, or if it goes even lower. But I think we got a little bit lower to go until we hit that demand zone. The pension people, they're holding it together barely at these lows, and then value versus growth. Oop. So value is definitely overtaking growth, and as the quarter closes, it's going to prove more and more true. Value versus growth, VTV versus VUG, showing the same thing for the strength and growth in that rotation. Value versus defensive, I'm seeing a swing failure pattern in some way, specifically deviation here, left shoulder, right shoulder, and resistance here. And we're going to see if we gain strength for defensive before we go for value. Stop hunt at this swing low, and then reclaim here or wherever, reclaim here to go to the upside for a nice swing failure pattern to reach the other end for the yearly high. This one is energy versus the broad market, looking pretty good. Utilities versus the broad market is holding. It's not doing too hot, but at the same time, still a good value, still a good pattern for more upside. Consumer staples, same thing, still looking good for the upside. Financial looking like It's still within the last year range, but getting ready for a continued breakout on the quarter. Um, it looks like it could be something, but it's too early. The same thing with industrial. It looks like it could be something, but it's too early. And then real estate. Um, I don't know. I think we probably go down a little bit lower, and then it might be a good time to buy. We'll see. But still short real estate, and we'll see what happens. Home builders wicked back up, wicked above. Now got shot down. We're at resistance right now, and we're going to see if we break down. But they came out with the home builders information today, and it seems like it's kind of holding until unemployment claims come out. Healthcare looks like it's consolidating down. A huge wick to the downside, so I don't know what that really means, but right now we're in a holding pattern. We got to see where the quarter in the 6 month closes. If the 6 month closes below here, we're gonna stay into this choppy zone until we get finished. Discretionary looks pretty bad. It I don't know what to say. Just like we're the consumer's been killed. Communications looks terrible. Materials doesn't look that great. I mean, it's another one of those like it's too early to tell kind of thing. Tech, we're on the verge of rolling over against the broad market. It's staying alive though. It's in this weird zone where it's below resistance here, but at the same time have put in a stop swing failure pattern. So someone's keeping tech up alive. It's just barely hanging on. And then Bitcoin versus the broad market, definitely the stock market is outperforming Bitcoin. And then ETH versus the broad market or SP 500. And we're going to see if ETH can hold on or if it's going to fall apart. And I'm going to bet that it falls apart, especially in 2024. I don't know so much about going into whatever's coming. Bitcoin versus ETH, still ETH strength against Bitcoin. And then gold versus the broad market, it's not really certain as to the clear winner yet, but we're getting almost to a swing failure pattern. Commodities is definitely outpacing the broad market. So for leadership on just alpha, it looks like it definitely belongs to commodities. So when people talk about inflation like being non-existent or not really something to worry about, like I look at this chart of commodities versus the broad market, and commodities is leading. Like, how in the world can you say that inflation is going to disappear or be gone when the chart doesn't recognize that? It's showing a bullish formation and it's holding, and we're going to get more fundamental data about that, but it's on the rate hike expectations are another confluence to my support of my claim. With the rate high expectations of whether the forward yield, the 2-year minus reverse the Fed funds, or the Eurodollar futures peak of 5.3 minus the 3.08 Fed funds. We still got more rate hikes to go from all those multiple participants with their proprietary information or real-time information, whichever. But commodities is still not squashed yet, and it goes to show that it might be in the supply chain and that bullwhip effect. Oil versus the broad market, we're still holding on oil. Huge retracement, and probably going to test the last year high. The dollar hit that resistance, happens to be the top. Hit the microphone. Happens to be the top, so that's interesting. Maybe we hit the last year high. I don't know. But this is the dollar against the broad market, so I don't know how to really judge that. I think before I said that it would be good for the week to judge a breakout, and it did work as a good judge right there on that close on the week for continuation up. Now we've came down into demand, and we're going to see if it holds and comes back up for a nice swing failure pattern. What we're going to do is we're going to put this there in an alert to see if the dollar is able to come back against the broad market in performance. And then TLT, maybe this one I also thought like the weekly was the way to measure this. TLT versus the broad market, we documented possible swing low, and it looks like it's the quarter is the perfect swing low. We reclaim it, we can move to the upside, and TLT will gain more strength, which would be somewhat significant. ZC, corn looks good still, and then wheat against the broad market still looks good. A little bit deeper of a retest. I don't know. We'll see what happens, but it's pretty deep, and we'll see if it pops back up. And so we looked at liquidity. We looked at factors, and it's pretty much what expected. We also looked at things related to the rate hikes, and we got that kind of information. We can see what's leading today. I don't know, but I thought the most beneficial would be just to go through the current assessment of what's going on, of where we're at. Currently, RSI is almost overbought on everything, and on the weekly, we've kind of poked our head up close to that 150 mark, and right now I think we had an H4 market structure break to the downside. Let's look on the fast what this looks like. So we're caught in between an H4, a daily support block, and then an H4 bearish order block. And so if the daily breaks, it's pretty much over, and it'll all come down to the unemployment claims, and we're at that 150, and you can tell that we've closed the day below the day below the 150. I think that's what that down arrow is about. You can see here with this weekly breaker and this weekly bearish order block, it's holding the line for us to continue to the downside. With us here at this support low, it's really holding on to the unemployment claims report. If we continue higher or if we continue lower, and it seems like an all or nothing kind of deal with this report when it comes to it collapsing 20%, or if it returns back to the highs. But we're going to find out, and thinking just based on what we've seen, we already know. And this oil looks like it's definitely falling apart. Lots of attack on these support lines, and whoever's holding it up is having a hard time just keeping it up. Like it looks like it's about to fall apart. The same thing with West Texas oil crude. It's just it depends on where we close on the week. We close on the week filling this gap. It's going to look really bad. Nobody's going to want to be on the bottom of that. Gold coming down, didn't retest just yet. I'm thinking if unemployment claims is as bad as it is, we're probably going to come back below this order block that we, I think it's supposed to have closed already. let's see. For some reason, it hasn't closed. There it is. I don't know. Like some of these need to be updated, but yeah, we had a breaker, and we're gonna see just how deep we get in this, and for the retest, like do we hold the last week low, or like do we break past it? And that's kind of the interesting thing I'm kind of curious about. And do we have like a resumption back in the dollar to the upside? And that's another thing that we're kind of curious about. We have no idea. Looks like gold is imitating the S&P 500. So with gold imitating S&P 500, it almost begs to say like will it go down 20% as well if it has the same target. And gold is just very unpredictable right now because of just the weird correlation with the dollar and just how it's come down. Bitcoin back at 15,000, and with the into demand, short time frame demand on the weekly, and for a nice stop hunt, and then I don't know. We're definitely in a lot of pain with everywhere. Looking like a bear flag to me. And then we can look at the euro. Euro, geez, these weeklies need to be refreshed. Might as well just refresh all of them. Hmm. Okay. But with the euro, we have yet to test just like gold to the bottom to retest. Let's see how this changes. No, it looks the same. Yeah, it looks the same. Looking like very similar to gold and the markets on Euro USD. Uh, Japanese yen looking like we're almost gaining strength. I don't know. Could be a turnaround. We'll see. And then S&P 500. Yep, we're definitely caught in between a rock and a hard place right there. And then Nasdaq. I know this one had a breaker to the upside. Almost coming in for a retest right here, breaking the H4 breaker to the downside. So not a whole lot to hold it up on that weekly breaker. So those bulls might get chased out of there. So if those bulls are full of retail, I would watch out just because definitely seems like the ones in control are not retail. So something to really watch out for. ETH has been something under particular interest just because if Bitcoin has fallen this much, will ETH continue the same way on the depth to the downside? It doesn't seem like it's falling as fast as Bitcoin, but definitely something that would be interesting to catch the downside. Um, Here, we're waiting just on. It looks like we had maybe an H4 breaker to the downside, and it just don't see it. Or like a retest. We had a retest, and this is the first resumption out of the retest. And we're going to see ExxonMobil. I think it was the clear signal for just delaying for the top, and I think we're getting really close to closing a breaker on the daily for ExxonMobil. As you can see here, we're getting really close to showing its hand for a reversal to the downside. The Dow here, we are in a very similar position where the daily order block is under threat, and that's it for there. Here, the U.S. dollar is we had a breaker to the downside on the weekly. That's very significant. So it's really hard to discern what's going to happen because the dollar is used as like a risk-off currency, and if unemployment claims were to be bad, I mean unemployment claims were bad in 2020. So if we were to say that it's going to be similar to 2020, it went down in February into the COVID nuke. So if we were to say, and I guess we would ask, did gold go up when the market was crashing? That's kind of just the next question. What did it do in February, gold? If it went down, then our assessment of what we bought is okay. So we want to go towards February 2020, and we could see here on a vertical bar, if this is February 2020, we had some chop, 220. So it looks like maybe January, February, March 23rd. So yeah, and it followed the dollar in terms of that crash with the unemployment claims that went up in 2020. And so I expect the same thing. I expect maybe after it hits a bottom, that we will have a nice spring to the upside. So this kind of pump is a little premature, but I think it's getting ready for that move. And I'm getting ready to be bullish on gold. It's too early. And I think people are looking for that correlation too early right now. I mean, specifically, that's kind of what it looks like. Swing failure pattern here, resistance right there. If we come back into it, so I don't know how it's going to behave exactly, but we expect a retest back into this weekly breaker, and I don't know how that's going to look, but definitely going to be interesting. No breaker right there just yet, but we're looking pretty perilous right there. Euro, we on our huge rising wedge right there with at resistance in some way. We didn't close above this last week, this weekly high right there. That's kind of just our go zone. If we close the week above there, I would say it's more likely a go, like a risk on. But right now, it's uncertain just how things are going to play out with the euro, especially with Russia landing bombs or missiles inside Poland. And here, Japanese yen. Looks like we're waiting for possibility of a weekly breaker to the upside. Already broke the daily to the upside, and we have some momentum with the H4 order block, and quite possibly might break up to the upside right there on the Japanese yen, right there. And VIX is also interesting. We had an H4 breaker to the upside. We're in for the retest, and we're going to wait and see if we have more volatility to the upside, and we're going to see how that plays out. And then Russell's the only one that hasn't broken to the upside, so I feel bad for people who are really into small cap right now because it's not really working out for them. Everything else on large cap is doing well, but when it comes to the small cap is moving slow. So I don't know, if you're really going for small cap, really just do a better analysis. And then copper came down pretty hard for the retest. We're going to wait and see, is that a deviation, or is that a higher high, higher low? No one knows yet. It's too early. Lumber weak, wheat weak, corn weak, soybeans and natural gas and gasoline. Soybeans, for the most part, looks like a rising wedge. Lots of resistance. Natural gas, weak, breaker to the downside. Rising wedge into it. Deviation right here into the 150. I think that's what that is. Or the 72. Reclaimed to the downside. for a swing failure pattern. Natural gas looking like it's attacking demand in this gap, and we're going to see if we go below it on gasoline. So gasoline coming back, that's a good sign. All right, so that's pretty much that. And as far as like the portfolio is going, this says 24%, but it's probably softened a little bit, like 22 or 20. So it's now 27%, and so we're long UVXY 80%, drip, which is I think a 2x short on oil, is at 30%. 3 times leverage real estate short 30%. S&P 500 3 times leverage short 30%. 2x leverage short gold 28%. And then a whole bunch of what's it called, crypto short, sand 40%, Matic 40% short, Atom 40% short, Ethereum Classic 40% short, Ethereum 40% short. Right now it says we have $115 cash. It would be cool if I can add more to like a drip short or real estate short. So I don't know, maybe we can bump this up to 40%, but it doesn't look like it. I think we have to delete it and then enter it again for a higher position sizing. But I think it's just better off if we just add it more to the crypto side on just a higher percentage short. But I don't know, or we just find some more instruments to short, to add, and just keep those current positions. We'll kind of play it by ear, but right now I think we're doing pretty good, sitting pretty, and just kind of waiting what comes next. And we're going to make a video separate of this, of the just a market assessment of just looking into the portfolio at the bottom, and then just my work on the Eurodollar futures, on just the green zone, and what kind of portfolio I'm going to have into the green zone, and just the investment strategy going forward after finding this Eurodollar futures cycle, the big cycle, and just kind of the strategy going forward on how I'm going to deploy capital.